African packaging company Nampak says it will buy closely held Nigerian drinks can maker Alucan and has an option to purchase a plastics manufacturer in a $301 million deal to expand its business in the country. Nampak also says it was considering an expansion of its Angolan beverage can factory with a second line. Here to tell us more, CEO of Nampak, Andrew Marshall. Andrew, thanks for joining us today. So you're said to be buying this brand new state-of-the-art aluminium can factory. I mean, who's selling it? Who wants out?
It's a new line that's just been installed in Nigeria. There's one other facility making beverage cans in Nigeria. We already are major operators there. We have two factories in Nigeria, one in Lagos, a metals business, and a cartons business up in Ibadan, which is about 100 kilometers north of Lagos. And we want to enter the beverage can market. We're very big beverage can. We're the biggest in beverage cans in South Africa, in Angola, all over Africa. So this was an opportunity to grow in Nigeria, which is growing fantastically for us in other markets, whether it's cigarette cartons or aerosol cans or whatever. So we're in the market, we're well established there, and it's just expanding into beverage cans.
But as I said, I mean, who's created this modern factory facility and of course is now selling it? It's a family-owned business who in fact have set it up. It hasn't been properly commissioned yet, it's brand new. And so we're going in and buying it now, and we'll be commissioning it properly in January, February when we take over.
Andrew, it's an interesting situation because Tiger Brands and famous brands are now Nampak going into Nigeria in a significant way, and then Woolies pulling out. How difficult is it to do business there? That's the first question. Second question, is this facility just for Nigeria, or is it going to also supply other countries in the region?
Yeah, we operate all over Africa, and we have been there for quite a long time. It's becoming an increasing proportion of our profits. The volumes are great, the growth is fantastic, and our margins are better. So for us, it's not a new market, it's simply a new product that we're entering in this market. And we really see an opportunity purely in Nigeria. To answer your question, we do not see this as being for other surrounding territories. The market is big enough in Nigeria for beverage cans only. So the purchase is really of the first line is this $300 million, but it's been configured, the new factory, to allow another line to go in quite quickly. So we actually would be planning, we would hope in the next year or two, to drop a second line in there, which is coming back to your point, Samantha, about Angola. We're looking at doing just that. The first line has run out of capacity, so we're producing about 80 million cans a month in Angola. And maybe a year or two ago when I was on the show, it was 20 million cans. So you can see the growth, and obviously we're hoping the same will happen in Nigeria.
Andrew, can you chat about, and it's a hard thing to quantify, but the type of reception you get in Nigeria as a foreign investor? How would you characterize that when you look at the types of receptions we give foreign investors when they look at buying South African assets? And is Nigeria, in terms of the government or the structures, incentivizing you in any way to invest there? Are they offering you some sort of tax incentive or some sort of other benefit? And are they quite receptive?
Yeah, we find operating in Nigeria now relatively easy. We've been there a number of years. We're expanding all the time. So this year we've added, for example, an aerosol line into our metals business. We've added a plastics closures line for Coke bottles, water bottles, things like that. We've added a new cartons line for people like Colgate and things like that, Unilever. So we find growing our business there is no longer a political issue. We don't have to deal with the government. It's a commercial decision. If Unilever want to buy more cartons from us, or BAT wants to buy more cigarette cartons, we'll install new lines. There are concessions on this new facility that we're buying. There are tax concessions that we get. And certainly we find throughout Africa we are welcomed. We've just opened a new line in Ethiopia, in Addis Ababa. That's to supply crates to Coca-Cola up there. Again, the governments have bent over backwards to welcome us in. So we certainly don't feel unwelcome. And I think the growth and our success in Africa demonstrates that we're not concerned, and we're looking to grow further in all the countries in which we operate.
And is your investment dependent on concessions, or is it do you have a general strategy about investing in various African countries? And if you get investment concessions, then it's kind of a top-up, an add-on, a bonus.
Yeah, I think what we look to do is to earn a certain return on our investments, and we have a cost of capital, and clearly we have to get a certain return above that. Obviously, any benefits you get, whether they're tax or investment, will help attain that return. But in general, the markets are growing, the margins are a little bit better there because competition is less. So yes, it's not dependent on the concessions, they help, but certainly for us growing in Angola is being driven by customers who need more cans than we can currently provide.
Mm-hmm. Andrew, this might be the last time we speak to you. I'm sure we'll try to get you on once more before you step away as CEO of Nampak. And if you just look at the contribution that Africa, outside of South Africa, is making, I mean, around 30% of your trading profit coming through, 2.5 billion rand. As you step away right now, I mean, how do you see the company has evolved? I mean, how do you see it positioned in light of the fact that some are wary of investing in packaging companies because of the margins, because of the cyclical nature of them? I mean, how do you see Nampak positioned for the future?
Yeah, I think if you look at our margins in South Africa, 9 or 10% operating margin to sales, it's reasonable, it's not terrible, it's not fantastic, it's kind of a world market average. In Africa we get double that, and it's obviously to do with the risks and the challenges and less competition. Africa already makes up a huge portion of our business. I hope you do invite me back at the end of the week when we report our results, because we'll be able to tell you at that point what the percentage is.
So it's improved from the levels we're seeing on the numbers.
It has improved, and we expect that to continue improving. And the sort of targets that we had set to hit 35% of our profits by 2015 was actually set on the basis of normal organic growth. Clearly acquisitions like this beverage can that we've just done, and we obviously also have this right or option to acquire the largest plastics company up there as well. If we're successful in doing that in the next year or so, I think by 2015 we're going to be well over 50%. Obviously easy for me to say because that's going to be pressure on my successor, but I certainly think we're well on track to do that. And it's just a good commercial logic to actually expand where the volumes are growing, the margins are better.
Yeah. I was jumping the gun there and saying final comments as you step away, but thank you for joining us today.